This is the Asia Trade. I'm Shery in Tokyo. The top stories this hour. Asian stocks set for gains as oil prices retreat and risk appetite returns. President Trump saying the Strait of Hormuz will fully reopen by Friday. SpaceX shares add another 20% on their second day of trading, putting its market value among the 6 biggest companies on Earth. And the Bank of Japan expected to raise its benchmark rate today at the first regular policy meeting ever held without the governor.
I'm Haidi, Stroud-Watts in Sydney. Take a look at the setup across Asia for trading today. And Shery mentioned another leg higher when it comes to SpaceX. This will have that pass through when it comes to some of the AI and space-related stocks in Asia as well. Take a look at, though, what we saw in the previous night's session when it comes to the Philadelphia Semiconductor Index, putting on 5.5%. The US stocks climbing as that US-Iran deal really spurring the slide in oil. But SpaceX jumping for the second day, adding to that blockbuster debut, 20%, extending on Friday's 19% rally. Switching out the board, though, watching what has also been really that risk-on factor in terms of that decline that we continue to see in oil, holding that fall. Brent holding that fall by 4.8%. Their New York traded crude, though, up by 0.8%. Still, net, we're looking at the biggest drop in more than 2 weeks. So we see the entire industries of traders, shippers, producers waiting for more details out of this deal, but also more details, Shery, on what central banks are going to do about this changing scenario.
Yeah, traders looking ahead to those bank decisions, right? Not only out of Japan, but also Australia, while assessing, of course, as Haidi just mentioned, the durability of that interim deal between Iran and the U.S. Let's bring in our markets reporter, Anthony Stevens, and Chief Asia FX and Rates correspondent, Ruth Carson. Anthony, when it comes to Japan, equities already at record highs. Are we seeing another day of positive gains across Asia today?
Yeah, the leads into Asia are very strong. It's not just SpaceX, which kind of draws a line under retail sentiment globally, but it's actually the specific tech leads into Japan are quite strong, and Korea for that matter. Micron is up 10%, Teradyne, which leads into Advantest, is up 7%. And this is because there is a repetitive dynamic of low volatility driving higher dispersion so that people can trade these semi-names without feeling macro risk. And as a result, they're also suppressing any kind of credit volatility around these names. And we saw a really good debt raising by NVIDIA overnight. They wanted to raise $25 billion. They got $85 billion worth of orders. Now, that kind of credit bullishness feeds back into the equity rally because that capital raising is going to be used on semiconductor capex, whether it's components or whether it's other chips as well. So you have this really positive dynamic where U.S. capital raising ends up in Asian equity markets in the form of earnings for these semiconductor companies. So this flywheel of capital is really starting to accelerate here as we leave the macro concerns around Iran and inflation behind. Of course, the risk management event of the Fed awaits us, but for now, momentum is firmly in the driving seat.
And Ruth, of course, we're getting a lot of hedge funds trying to game out what this means for particular trades, everything from the yen to treasuries to even instant noodle stocks.
Yeah, absolutely.
Look,
we spoke to a bunch of hedge funds out there. Sorry, Anthony, to interrupt you. But yes, absolutely. We spoke to a bunch of hedge funds around the world yesterday as soon as the announcement came out of a peace agreement. And yes, hedge funds are saying, you know what, dust off that pre-Iran war playbook. Let's take a look at, what were some of the bets that really drove markets and made money into the war. And so that includes now, 15 weeks after the first headlines scrolled across the terminal on the war, short-term treasuries, the ones that have been really hammered by those Fed rate hike bets. By those, investors are looking to short the dollar. Even the yen has been bought by some hedge funds out there who go, you know what, at 160, this is looking pretty good. And yes, even instant noodle stocks, the companies that have been sort of pummeled by the energy cost crisis, get into those too.
And Anthony, how much of this kind of depends on what we see from the central banks, right? It's funny, depending on who you are, some people still think maybe a 60% of a hike before the end of the year still looks okay. Does this very much depend on what the details are of this deal and how meaningfully we see the energy outlook change?
Yeah, very much so. So we see U.S. average retail gas prices are still about 30% higher than when the war started. And the U.S. is materially drawing into their inventories as well to keep those prices even at those levels. So the duration of the war is a key input into the inflation decision making. That being said, though, we are under the wash kind of regime where he tends to look through these volatile elements of inflation. So there is a risk that the market is overstating the impact of oil into his inflation calculations, and that is going to be a key part of what the Fed discusses. If the Fed says that energy prices are considered a transitory element to inflation, equity markets will take that really well. And to be honest, markets pricing at the moment is in that direction. Inflation swaps are kind of restrained, and rates volatility is very restrained. So this provides the kind of macro backdrop for the kind of equity gains that we're seeing at the moment.
Ruth, of course, we've been watching the Japanese yen. What's been interesting is that despite the upside that we got in other currencies, say even the Aussie or the Korean won in the previous session as we got the Iran peace deal, the reaction was pretty muted here in Japan. How are we setting up for the Bank of Japan policy decision today?
Yeah, there was one pair that really stood out yesterday in the 24 hours of trading, at least in the Asian session. People were asking you that question, are you looking at dollar yen? It's still at 160 when everything else is virtually rallying against the dollar on the peace agreement. And that shows you the sheer amount of pressure that is still on the BOJ to hike rates. We know that a rate hike is baked in today, and so all eyes will be on that. But that said, the question now is how much is enough? Because at 160, traders are signaling that one hike is certainly not enough. They're demanding more. JGB yields are still high. And if the BOJ doesn't prove hawkish enough, as judged by the investment community, we will continue to see pressure on the yen.
Anthony, in the meantime, we see another leg higher when it comes to SpaceX. Does this give kind of a further underlying resilience to the rebound that we see in AI stocks and tech stocks?
I can only speculate that the gains that SpaceX has given the kind of risk-seeking retail that would have invested in it, you have had 40% in 2 days, that will accelerate the risk appetite of retail coming back into Asia. It's the same investment community that has been buying the dips all the way through, right, into the kind of labor market-related wobble of last week. We've seen the retail community have very strong holding hands here, diamond hands as you call them, and that community has been richly rewarded. And they're going to continue to deploy capital as long as the AI story remains intact.
Anthony Stevens there, and our chief correspondent for FX and rates in Asia, Ruth Carson. And of course, much more coming up on today's Bank of Japan decision. We'll have analysis with economists from Bank of America and ING. Also joining us later is former BOJ board member Sayuri Shirai.
Yeah, Shery, we've got some breaking news crossing the Bloomberg when it comes to BlackRock shedding another 200 jobs. It looks like they are actually adopting what looks like a regular cycle of cuts. Larry Fink said to be embracing a more continual cycle of right-sizing. The world's largest asset manager just embarking on that latest round of job cuts. BlackRock eliminating just under 1% of its workforce. It's about 200 employees, according to people familiar with the matter. This comes after BlackRock trimmed headcount 3 times over the past 18 months. So measured cuts, but that regularity helping redefine culture at the firm that's grown with some pretty major acquisitions over the past few years. We're hearing that the latest round includes roles from investment operations to technology, according to these people that have given us that information, including affecting the private financing arm as well. Let's get back to our top story. The details of the US-Iran peace deal, of course, are very scant. The former US Special Envoy for Syria, Joel and Rayburn. More ahead on the Asia trade. This is Bloomberg.
Strait is already partially opened. As you know, they're doing a little hunting for a couple of mines that they've already found. But it's essentially ships are starting to go out now. On Friday, it'll be completely opened.
President Trump discussing efforts to reopen the Strait of Hormuz by Friday during a bilateral meeting with French President Emmanuel Macron. Of course, we continue to watch the implementation risks around this deal. In the meantime, though, risk assets have been rallying. We are talking about U.S. stocks rallying with that risk on trade, the cyclical rotation back in play into tech, into crypto as well. Right now, we are seeing a little bit of downside when it comes to the future space. Nikkei futures falling 0.4%. But this, of course, after Nikkei stocks rallied to a record high. We're seeing a little bit more upside when it comes to crude prices, but we're still holding at around that $81 a barrel level. Let's get more on the U.S.-Iran agreement and bring in Bloomberg Politics editor Laura Davison joining us now from Washington. Perhaps the market's reflecting some of that skepticism and whether or not this U.S.-Iran deal will actually last. Where are we at now?
Yeah, there's a lot of skeptics out there, both about, kind of what's in this deal, if this is a durable deal, if it will be signed, in fact, on Friday, and if the Strait of Hormuz will actually be opened the way that Trump has characterized it by Friday. Even just yesterday, he was saying, ships, start your engines. The oil is now flowing. The White House, was a little bit more cautious today, saying it would take days, if not weeks, to really restore traffic through the Strait. But we're hearing a lot of mixed messages from the administration, both on how quickly we could see the contours of this deal. That Trump said it would be released, sometime Friday or later. We heard, but also from a senior administration official that it could come as soon as, 24, 48 hours from now. So there's still a lot of behind the scenes kind of work happening, that there was an announcement of a deal really before some of the details had been worked out. And again, this is really sort of a preliminary agreement for what we understand of what this deal has, sort of an agreement to start the talks, an agreement to, restart the flow of traffic through the Strait of Hormuz, but all of those more thorny details about Iran's nuclear program and sort of what a more lasting peace in the region looks like, none of that has been figured out as of late.
And we saw earlier President Trump talking to French President Emmanuel Macron. How are European allies feeling about this deal right now?
Not at all optimistic, quite a 180 from what we're seeing from the White House, that they are quite skeptical that the energy flows will start up the same way that Trump has characterized them. They're also have some concerns about, where Israel fits into this, as well as, strikes in Lebanon. Some countries have been hesitant to, send in some of the support, minesweepers and things like that, until they have assurances that, that Lebanon will not continue to be attacked as it has been via Israel. So, we're sort of seeing again, much like we saw in the early stages of this war, where the U.S. had a lot of confidence and European allies were really hanging back, waiting to see exactly how all of this will play out. That's exactly what we're seeing this week. Lots of chatter on the sides of the G7 about, what may be happening over the next 5 or 6 days.
To your point on Lebanon, what's been the implication on the U.S.-Israel relationship so far, given this conflict?
We've really seen, sort of a falling out between Netanyahu and Trump. They went into this war hand in hand. It was a joint effort, and there was lots of reporting that shows that both Trump and Netanyahu, had some key conversations ahead of this that really led them into it. But we had, Trump just yesterday, kind of referring to Netanyahu as a very difficult person to work with. They're really not on the same page. The U.S. is saying that, look, Israel doesn't necessarily need to be involved in this peace deal. But we've seen time and time again, including as recently over the weekend, that as a deal was coming together, if there are more strikes from Israel's side into Lebanon against Hezbollah, that has continued to be a point that has derailed peace talks throughout this process. So this is, really sort of a great partnership that we've seen fray over the past 3 months or so.
Our Bloomberg Politics editor Laura Davison there with the latest. And let's bring in for some more analysis on the situation. Joel Rayburn is a senior fellow at the Hudson Institute Center for Peace and Security in the Middle East. He also previously served as a United States Special Envoy for Syria. Really great to have you with us. And, as Laura sort of contextualized it, this is more of a deal to try and work towards a more substantial deal. The details are very scant at this point, but we know that the flashpoint, even in the last few days and over the weekend, has has and will probably continue to be Hezbollah in Lebanon. Israel is keeping its army in Syria and in Lebanon for now. And we even heard from President Netanyahu saying that, Prime Minister Netanyahu, I should say, saying that he doesn't know what that deal is going to entail. Are they going to find agreement on the issue of Hezbollah?
I think that, well, that's a good question. I think that's the question of the hour. But I mean, what the MOU essentially is, in the most immediate sense, is it's an extension of the current ceasefire for at least 60 days while they go into technical talks about the longer term issues, including the nuclear program, financing of terrorism, and so on. And it's also an opening of the strait, a commitment by the Iranians to refrain from attacking shipping going through the strait, and it's a commitment by the U.S. that if the Iranians will do that, then they will lift the blockade on Iranian vessels. Now, this will all go haywire if vessels start to go through the channel that's close to Oman that the U.S. has helped to clear, and then they're struck either by drones, missiles, attack boats, or mines. That would throw the entire deal. It would derail it all, let alone what would happen in Lebanon. So the Iranians, the stakes are high for the Iranians to meet those commitments. It does come down to, though, question beyond that of in Lebanon, will the Iranians compel their proxy, Hezbollah, to refrain from attacking northern Israel and Israeli positions inside Lebanon? Because that is the U.S. expectation.
To your point, you say the Iranians are going to try and really push the boundaries and the contours of what's been agreed to, or what will be agreed to under this preliminary MOU. Does that give you the indication that perhaps they have a bit more leverage? Because the whole way through, it has felt increasingly like President Trump is more keen to get an off-ramp than perhaps the Iranian side is.
I think people could have argued that before last week when President Trump did something I think the Iranian regime wasn't expecting, which is that he went back to military strikes. He showed he was willing to go back to military strikes. They were pretty robust late last week, and I think that surprised the Iranians. That's probably why you got this final Iranian agreement to sign the MOU. Now, but as you say, in my own experience, watching the Iranians for more than 2 decades, yes, they do try to change the goalposts as you get close to the implementation of an agreement. They begin to try to relitigate points that were already closed. They try to raise up new issues, and they try to stretch the boundaries of the deal to get as much as they can, because they think at that point the other side, as you're approaching the implementation of a deal, they think the other side then has an interest in seeing the deal through, and that's when they can get extra concessions. I think those extra concessions they would push for might include slowing down the reopening, slowing down a guarantee, for example, that all the mines have been cleared. They might try to push for more unfreezing of assets if there are unfreezing of assets already attached in the agreement. And they would try to push for more limitations on the Israelis in Lebanon. I mean, they would like to see the U.S. Say publicly commit to an Israeli withdrawal from Lebanon at some point. So don't be surprised if there are those kind of 11th hour changes that the Iranians try to stuff into the deal. But I don't think the Iranians, I mean, I'd be surprised if the Iranians take steps that would just wholly derail the deal, because it's so much in their interest to have the deal. And I think after last week, they have to be afraid that President Trump can turn back to military force if they don't.
If Iran gets all or even some of the things that you just detailed, how do you think that goes down with the foreign policy hawks in the president's own party?
Well, probably not too well, but that's why I don't see the administration going that route and conceding to the Iranians the large-scale unfreezing of assets. What the Iranians want, the estimates are that there's about $24 billion in Iranian assets that are frozen in various places. And the Iranians were pushing for all of it. They were pushing for half of it up front before they do anything. And the administration has been pretty consistent at saying they will not accede to any unfreezing of assets until the Iranians have done their end of implementation. So if the Iranians were to try to push and to keep the strait open to push for more unfreezing of assets, I don't think that would be looked at too kindly here in the U.S.
What are you expecting and watching out for in terms of, and I think you hint on that the sequencing of how this deal progresses, right, over the next 60 days?
I think, look, the Iranians. There's a risk that the Iranians will try to draw the U.S. into talking about talking, and to change the parameters of what they're talking about. So the Iranians are famous at getting into a negotiation and saying, "Well, issue X is all we're here to talk about. We're not at all going to talk about issues Y and Z," even though they may have committed to that beforehand. So they try to argue to take things off the table. This is how they drew the Obama administration into 2 years of talks before they signed the JCPOA. There's just no reason, given the leverage mismatch, the military mismatch, the economic pressure mismatch, for the U.S. to be drawn into that kind of just absolutely interminable negotiation. So I think it'd be very good for the president to stick with the 60-day window once it's established and make clear that he would not be inclined to get to the end of the 60 days without some sort of progress, without some sort of resolution. But that's the risk. That's what the Iranians will try to do. They'll try to extend the thing indefinitely to try to get, because they think they can get to the U.S. midterms and that the political pressure on the administration will be too heavy to have a credible return to force and sanctions and so on.
Do you think we've had a meaningful gain at the end of this if this deal progresses as the contours kind of, would want it to? Do you think we've ended up in a better place for the United States compared to the 2015 deal?
I think you're on the way to there. Yes, materially speaking, the Iranian regime is militarily weaker than it was. I mean, look, one of the problems and the reason why it took 2 years for the Obama administration to get to the JCPOA, that nuclear agreement, was because those negotiations that the Obama administration were doing with Europeans and the UN were never backed by a credible threat of force. And they weren't really backed by much economic pressure in the form of really tight sanctions. I think President Trump has shown he's willing to do both. So he has that up his sleeve that he can use. So his negotiation will be backed by the threat of military pressure and economic pressure in a way that wasn't true before. Also, what he's got is that Hezbollah in Lebanon, back then in 2015, Hezbollah really posed essentially an existential threat to our Israeli allies. This time, not so much. They are a nuisance, they're an operational threat, but they're not a strategic and existential threat as they were before. So the Iranians are playing with fewer cards. The new card they have is the Strait of Hormuz, but we'll see how much they can get out of it.
Joel, really great to have you with us. Joel Rayburn, who's a senior fellow for the Centre for Peace and Security in the Middle East at the Hudson Institute. More ahead here on the Asia Trade. This is Bloomberg. Well, as President Trump continues to declare that the Strait of Hormuz will be reopened by Friday, there's quite a bit of skepticism coming through from even European leaders about the practicality and how this is going to work out. In the meantime, take a look at this chart showing the U.S.'s emergency supply of crude oil falling to the lowest level since 1983. The Trump administration moving towards completing the plan to release 172 million barrels to ease fuel prices. And still ahead, central banks contending with the inflation and energy picture as well. The BOJ expected to hike today. The bigger test could follow when the deputy governor stands in for Governor Rieder at the media conference. We'll take a look at how we're setting up for markets because, of course, as we continue to wait for details of this Iran-US peace deal, we are seeing central banks really contending with the meaningful implications on the energy crisis and whether we're going to see that change in the inflation and growth picture as well, given that this has been the biggest disruption to the oil sector in history. But take a look at what we're setting up for when it comes to expectations from the RBA today, Shery. We are expecting, after a string of 3 consecutive hikes that we've seen so far this year, that the RBA will hold, given that we are starting to see some of that weakness come through in the jobs numbers and perhaps even signs that stubbornly above target inflation might be coming down too.
Yeah, of course, inflation risks are huge here in Japan as well. So we'll continue to watch how the Japanese economy reacts to, of course, this Iran peace deal. What was really interesting was that the Japanese yen strengthened only marginally yesterday, despite the fact that we had that strength on the Korean won and also the Aussie dollar. When it comes to the Bank of Japan policy decision, the expectation right now is for a 25 5 basis point hike to 1%. This would be the highest level since 1995 and the first move after its December rate hike. What will be interesting will be that this is a very unusual meeting where the BOJ Governor Ueda is actually hospitalized. So it will be his deputy governor Uchida who will give out the press conference. What sort of message will he send will be key for markets to sort of figure out the monetary path for the BOJ. Let's actually discuss all of this with Bank of America Head of Japan Economics, Izumi Devalier. Izumi, so good to see you. It's been a couple of years.
Yeah, thanks for having me back. It's good to be here.
What a great day to be back, right? I mean, especially when the BOJ is almost certainly going to move.
Yeah.
Is that your expectation, and why would they be doing it now?
Yeah. So basically, a hike to 1% at this meeting is 98% priced in by the markets. I think, if you look at the inflation numbers, yes, the headline inflation has been falling, partly on the back of government subsidies, but the Bank of Japan's underlying measure, excluding these distortions, is still running at 2.8%. So inflation pressure is still very strong. And the Bank of Japan, I think, is quite firm in its conviction that it needs to continue adjusting interest rates higher because currently, with inflation so high, real rates are negative.
It's been very gradual, which has been one of the key reasons why we see so much pressure on the Japanese yen. What are you expecting from Deputy Governor Uchida today?
So I think, again, because the hike is such a done deal, I think the focus is on his communications around the path forward. I think for the communications to materially move the markets and the yen to firm, we would need some kind of further commitment that the Bank of Japan is really leaning towards a faster hiking pace. But I think our view is that kind of hawkish surprise is going to be very hard to deliver. Markets are already pricing in quite a bit of hikes going forward. We have the second hike this year priced in 55% by October. So I think it's hard for them to commit. We'll see. They're going to leave the path open and basically hint that they might be considering a rate hike in the autumn. But I'm not sure how much more you can get beyond that.
Is a weaker Japanese yen at this point inevitable given how much is already priced in when it comes to the hawkishness of the BOJ later and rate hikes?
Yeah, so actually our FX strategist view is that if you look at the underlying, structural flows around the yen, they've actually improved over the past couple of months. Our thesis has been that the reason for persistent yen weakness over the past, 3-4 years is because of persistent outflows from households due to the NISA program, corporates doing outward M&A, and of course the deficit in the trade balance. But all of those are starting to stabilize. I think why the yen has stayed weak could be because the very strong equity rally in Japan has caused a hedging, yen selling associated with hedging. And also maybe there's a concern that among market participants that the Bank of Japan is behind the curve and some fiscal premium priced in.
The rally in equities has been really interesting, despite the fact that we had the ongoing war in Iran. Now that the conflict has ended, do you expect to see any big changes in the markets?
Well, I think this should be net positive for markets, right? From Japan's economy, the Middle East conflict and the rise in energy prices was a negative terms of trade shock. So we weren't really worried about the economy falling into a contraction, but it does reduce those downside risks a little bit. And for corporates, it means, especially importers, that pressure from input cost rises, a little bit less worrying going forward if the deal sticks.
Right, and that is a key implementation risk that everybody's talking about right now, because it was so interesting that the Japanese yen didn't strengthen really that much, despite the fact that we know how Japan is exposed to Middle Eastern oil, right? Before the war, I think it was imports of more than 90% of oil. When we are expecting today's decision from the BOJ, we're also looking at JGB purchase plans. Explain this to me and why this is important.
So this is a point of confusion, but the Bank of Japan had this very aggressive QE program that they started unwinding formally in 2025. So they've currently announced a plan going till the end of this fiscal year, which sees them reducing the pace of their monthly JGB purchases by 200 billion yen per quarter. Now, when they do this interim review of QT, they need to extend the guidelines for another year. So the focus has been this question of, okay, do they pause the reductions or do they keep on going? It looks like, based on media reports, they're going to pause the reductions. But the key point is the BOJ balance sheet will actually continue continue shrinking because there's a lot of redemptions on their massive JGB holdings. So QT will continue, but I think from a flow perspective, this is at the margin positive for supply-demand dynamics in the JGB markets.
When they adjusted the purchases last year, they talked about JGB volatility, which we continue to see, right? Yields at multi-year highs. This is going to be a bigger burden for the Japanese government. How are you seeing that fiscal scenario?
Yeah, overall, there's a lot of fiscal pressures. It didn't just start with Prime Minister Takaichi, right? There's been a pressure to increase defense spending. You have to do a lot of investment around these AI and all that stuff. So JGB net issuance has been increasing, and I think the key point is that the Bank of Japan used to be such a dominant buyer in the JGB markets during this aggressive QE program. They're steadily withdrawing. So that requires different buyers to step up, and the clearing price at which the supply-demand balances is going to be higher, meaning higher yields.
The fiscal issues here in Japan, at least, have been really put in place in order to help Japanese households as well during this time of higher inflation, higher oil prices, right? How has that filtered through the Japanese economy and households when it comes to all of these measures on subsidies and trying to help with fuel prices as well?
No, I certainly think the household subsidies, gasoline, subsidies have put a floor on consumption. Had it not been for those subsidies, the spike in energy that households saw would have been much sharper, and it would have been a downside risk for consumption. So it's definitely, helped keep the economy on a moderate expansion path. With this, which is precisely the reason that I think the Bank of Japan feels confident that it and believes that it should continue to adjust interest rates.
How are Japanese households feeling right now? I mean, we talked about inflation. It's been above 2%. It's just fallen below that 2% BOJ target. But on the ground, when you have Japanese people spending in yen, not being able to travel abroad because it continues to weaken against the greenback, and you have inflation, how is sentiment running across the country right now?
Well, if you look at consumer sentiment, it's the Middle East, the energy shock definitely has not been a big help. It's actually fallen sharply. But I think the broader concern is that, even though inflation numbers, we look at the year-over-year growth, but households feel the level, right? And the cost of living, the rise in the price level over the past 5 years has been very significant. So I think even with inflation slowing at the margin, even with the government subsidies suppressing prices, households feel like the cost of living has gotten significantly higher, and I think there's still a lot of dissatisfaction around that.
Izumi Devalier, really good to have you back in the studio and in Tokyo together with me, Head of Japan Economics of Bank of America, Haidi, of course, as we expect that BOJ policy decision later this morning.
Yeah, from the BOJ to the RBA, Australia, Shery, set to keep its key interest rate unchanged for the first time this year. Money markets are paring bets on further tightening amid signs that the economy is beginning to soften. For more, let's bring up Bloomberg economist James McIntyre. Signs of softening, particularly if you take a look at the labour market. What's inflation looking like?
Well, we still have inflation being too high, and that's what the RBA characterised it at in May, and they're probably likely to characterise it again. But what we are seeing, though, is that inflation is easing back. There was a big help from the government in the April inflation data. That's the latest monthly reading that we've got, and what that was the government's efforts, not just in terms of cutting taxes, but in securing the supply of fuel, has actually meant that right now, if we look at the latest weekly data, the fuel price in Australia, even before the ceasefire on the weekend, the fuel price in Australia last week was below where it was, or back to where it was before the war started. So there's some further easing in inflation to come there. But the economic surprise index for Australia, we've seen not just inflation, not the labour market, but a range of economic data results over the last month or two that is in deeply negative territory. Things have been weakening and softening up, and inflation was softer than expected, and that's part of what we're seeing, that overall picture of softness.
How much of that has been influenced by expectations for the property market following the budget, do you think?
Yeah, well, we have seen a big slowing in the property market, and we're yet to see how the RBA is going to interpret that and how comfortable they're going to be about the broader economic spillovers as a negative wealth effect, especially in the two largest capital cities, takes hold. Post the budget, there has been an exacerbation of the softening in the property market that has been evident since November, as late as November last year, but really started to gather ahead of speed in February and March after the initial 2 rate cuts. It wasn't just the budget. We've got 3 rate cuts now. everyone was expecting, if we circle back to 12 or 6 months ago, that maybe there would be easing in 2026. The property market has instead been hit with these 3 rate cuts, and now the uncertainty from tax changes. There's a real risk of an exacerbation of a downward spiral there, and a big negative wealth effect coming through, hitting also residential construction activity and the whole range of sectors in the economy. So that's a soft spot the RBA is going to need to be conscious of. If they are thinking about talking tough on inflation, they could scare that property market that is already softening and tipping a bit.
Bloomberg Economics economist James McIntyre there, ahead of that RBA decision. More ahead on the Asia trade. This is Bloomberg.
These are the latest from the corporate front. Shares of Japanese taxi-hailing app provider Go will start trading in Tokyo today after the country's largest IPO this year. The offering raised $553 million, valuing the company at about $1.2 billion, with around 70% of shares allocated to international investors. A strong debut could support Japan's IPO market, where fundraising has fallen to its lowest level in 4 years. The creator of Chinese social media platform RedNote is said to be preparing for an IPO in Hong Kong by the end of June. Sources tell us Xiaohongshu is working with advisors on a potential listing that could rank among Hong Kong's largest in recent years. The app, described as China's Instagram, has grown into a lifestyle and social commerce powerhouse. Shanghai Inflame Technology has received approval from an IPO to raise $888 million on the Shanghai Stock Exchange Star Board. The Tencent-backed company plans to use the proceeds to develop AI cloud chips and related software. Inflame is the last to go to market of China's so-called Four Little Dragons, a group of leading AI chip makers. Fox shares tumbled after it announced a deal to buy streaming platform Roku for about $22 billion. The deal combines Fox's content with Roku's platform of more than 100 million users, creating the third largest player in the U.S. television market by viewing share. Fox is targeting growing demand for cheaper streaming and competing with Amazon and Netflix for ads.
The founder of Indian pharmaceutical giant Biocon says the country needs to maintain biotech sovereignty as AI advances. Kiran Mazumdar-Shaw told us exclusively that India needs to attract further investment into the industry to capitalise on its advantage in talent.
India can, because I think we have, we don't lack the talent, we don't lack the science, we don't lack the capability. But like I said, we do fall short when it comes to the investments that are needed to get us to a global scale. And I think that's where we need to focus. And I think India is beginning to recognize that. I think opening it up to the private sector is extremely important. And hopefully VCs will see the merit of investing in these very exciting opportunities, because these opportunities will not scale without having the right talent. And I think that's where India has an advantage.
Talk to us about why it is important for India to have biotech sovereignty embedded in AI. Is it about not allowing India's biological data to sit in the US, sit in China, where, they possibly can create therapies for Indians themselves and then sell it back to India at a high cost?
My view is that when I talk about biotech sovereignty, this is going to be about trading data, trading knowledge. And every country will have its own sovereignty embedded in many of these areas. And I think biotech is a very exciting area because of the fact that biology has never been so computational in the past. And India has that capability, and several countries have that capability. So I think allowing our data to be leveraged by other countries and not doing something with it ourselves is going to be a lost opportunity.
Kiran, we're talking about biotech sovereignty against a backdrop of India's reliance still on China when it comes to supply chains. Where are we with that? I mean, how successful has India, Biocon, been in trying to cut its reliance, cut the cord?
You know, it's very interesting for you to note that China's generic and API business was built by Indian talent, by the way. Indian talent went to China and helped them to develop API know-how and finally generics know-how. So it's very important to point that out. Of course, China then learnt very fast and then built
ran with it.
But having said that, in biologics and biosimilars, there is zero reliance on China. In fermentation science and fermentation APIs, which is what Biocon has really focused on, zero reliance on China. So from that point of view, I don't think Biocon has had a problem of China reliance in terms of supply chains.
Biocon founder and chairperson Kiran Mazumdar-Shaw speaking exclusively to Bloomberg's Haslinda Amin. Take a look at the Bloomberg Video Hub. Subscribers can explore live streaming, news and interviews all on our Bloomberg TV shows, documentaries, reporter analysis and more. Check it out. It's bloomberg.com/videos. More ahead here on the Asia Trade. This is Bloomberg.
Take a look at some of the big moves that we saw in the Wall Street session. We had this rotation back into tech, not only tech, also cyclicals, crypto as well. Bitcoin at one point topping the 66,000 level. Of course, right now it's under a little bit of pressure, but you can see the NASDAQ 100 having gained more than 3% and the Philadelphia Semiconductor Index more than 5%. SpaceX surging 20% in the second trading day, adding to similar gains in the previous session. So really reinforcing confidence in the AI risk asset cycle. And that's really translating to the Asian session as well, especially around South Korea and names like SK Hynix, even LG Electronics gaining about 1%. BlackRock's global fixed income CIO Rieder says the U.S.-Iran deal should also take the pressure off inflation and central banks. He also told us exclusively that the stock rally triggered by the agreement shows investors are ready to deploy cash that's been parked on the sidelines.
The thing that's amazing to me, and by the way, it played out around the SpaceX transaction, there is so much cash that's sitting on the sidelines. So we can debate, number depending on how you measure, 8 or 9 trillion in money market funds, 19 trillion in deposits. And what happened? You go back a week ago and you think about this big SpaceX deal. People have to find room, though, in terms of portfolios, et cetera. So you create a little bit of that. And then once that has happened, all of a sudden it unlocks this cash, particularly when you get a good piece of news and people say, gosh, I can get into the pool. And it's pretty explosive when you see it happen. Obviously, the move, after we've had a good run in the equity market has been pretty impressive today.
Thank you for explaining that, because sometimes it's, when you ask a macro guy what's going on in the equity market and the bond market, you don't often get a candid response. So I appreciate that. I'm curious, when we link what's happened with the interim peace deal with the spate of central bank meetings this week, I believe there's more than 20 central bank decisions this week. Was this a gift to central bankers? Maybe not in the U.S., where we already know that the Fed's not going to do anything one way or another, but for other central banks, this is some kind of relief for them.
100%. I mean, you think about, obviously, with headline inflation, the stress is real around what those numbers end up being. I mean, we look at the core, I would argue there is some transmission coming in, but it was interesting to see the CPI report last week. We look at core goods. Core goods, 3-month moving average core goods inflation is 0.1%. And 6-month moving average 0.4. You're not seeing in goods. Where you're seeing this latent inflation is, quite frankly, in services. Things like insurance, a number in CPI. You look at that number, education, et cetera. So it's definitely helpful. It definitely takes, places like the ECB that are looking at multiple hikes, and you say, gosh, now maybe they don't have to move in multiple forms. So it is a big deal. I mean, it is a big deal for all markets when you think about central banks may not have to hike as much. And then you think about, what does it mean for overall when you think about your NPV of owning the equity market if rates aren't going to move significantly higher? It's a big deal.
BlackRock Global Fixed Income CIO Rick Rieder there, speaking exclusively with Bloomberg's Scarlett Fu. Well, JP Morgan has turned bullish on stocks following optimism that peace in the Middle East is near. The bank's trading desk says a potential US-Iran agreement could catalyze a broad risk-on impulse across equities supported by strong fundamentals. But they're also warning of risk in bond volatility driven by hawkish growth and inflation data, as well as central bank messaging. Nomura says the US-Iran deal bolsters the case for selectively shorting the dollar, including against the Chinese yuan. Strategists see the offshore yuan strengthening significantly alongside a broadly weaker US dollar. They recommend focusing on relative value opportunities in foreign exchange, such as buying the euro against the Indian rupee. Let's get you a quick look at markets as we're just a few minutes away from the start of trading across major markets here in Japan, Korea and Australia. And it is a big day for central banks. Of course, we're expecting moves from the Bank of Japan, despite the absence of Governor Ueda, and keeping an eye on the communications when it comes to the media conference later on today, perhaps higher in terms of the implications. Australia, we're not expecting a move from the RBA, but also looking at that assessment as to what the recent slowdown of the indicators in the economy, including what's going with the property market, might be faring in terms of the RBA and Governor Bullock's thinking. Nikkei futures upside of about 0.5% there. We're looking like Kospi futures looking much stronger than Nikkei. Japanese equity traders perhaps taking a bit of a breather after that record high rally that we saw in the previous session. Sydney looking a bit of downside of 0.9%. We do have the market aheads in Sydney, Seoul and Tokyo next. This is Bloomberg.
This is the Asia Trade. We're counting down to Asia's major market opens, with investors really optimistic about the Iran peace deal. But of course, there are still caveats in that agreement. Haidi, it's an interim agreement. We don't have the official text. Of course, we're still watching for how that reopening of Hormuz takes place at a time when we do have big monetary policy decisions, one here at the BOJ.
And one here in Australia with the RBA too. Very different policy outlooks, but sharing that uncertainty when it comes to the inflation and growth picture as a result of the Middle East, right? President Trump, as you say, says that the Strait of Hormuz will be reopened by Friday. But Shery, we know there's plenty of skepticism from European allies as to how that's going to happen.
At least when it came to the overnight session, we saw the dollar with really declining a little bit against other currencies, that safe haven demand subsiding. And so we had the likes of the Korean won, the Aussie dollar gaining ground. What was interesting was that the Japanese yen didn't strengthen that much. So we're still at that 160 level against the US dollar. And of course, we are headed towards that BOJ policy decision. Now, the expectation is for a rate hike, the first time they move after that hike back in December. What will be interesting in today's policy decision is that the governor, Ueda, is away. We're watching for that press conference from his deputy governor today, Uchida-san, who will be speaking in the afternoon. Of course, the messaging will be key here. The Nikkei now falling a little bit. The topic's falling 4%. We're still moving between gains and losses, but this after Japanese stocks reached record highs. We also saw JGBs rallying in the previous session. Of course, with oil lower, the pressure on the inflation outlook also easing. Take a look at how South Korea is coming online, because the other story has been around AI, around tech. Of course, we had SpaceX also popping another 20% in the overnight session. So that's leading to more confidence in this AI trade. You can see the Kospi still gaining 2%, and the likes of Samsung Electronics, SK Hynix gaining about 4% there. Even the Korean won still holding at that 15-14 level, seeing a little bit more strength against the US dollar, Haidi.
Yeah, take a look at what we're watching when it comes to oil prices, which plays such a big part in terms of how we're seeing this risk on equities sentiment, right, including that rotation back into that AI and chip-related play. But oil continuing to hold on most of the declines that we see in terms of Brent crude, though coming online higher by 0.7%. All in, though, we are seeing crude prices holding the biggest drop in more than 2 weeks as we continue to kind of manage expectations, looking for the details of the US-Iran deal. Traders, shippers, producers, airlines, all waiting to see how this lack of detail could translate into a more durability when it comes to these declines in oil prices. Treasuries are looking like this as we really kind of also want to see how this plays into the Fed's thinking as well. US bonds have been rallying in the overnight session, traders trimming those Fed rate hike bets on account of potentially that come down in inflation and energy prices as a key part of that basket, right? Ahead of the RBA, we're seeing some softness going into the start of trading for Australian stocks.
Heidi, let's bring in Naomi Fink, Chief Global Strategist and Chief Economist at Amova Asset Management. And of course, Naomi, what a great day to have you here. We do have the BOJ, we do have the RBA decision at a time when we have all of this optimism around the Iran peace deal. What are you watching in Japan as we are looking at the market opens? A little bit of a mixed picture when it comes to the Nikkei and the topics at the moment.
Yes, well, Japanese stocks are very much bought into this risk-on environment and the investments surrounding AI at the moment. There are a lot of names that might not be even initially so apparent that are participating in this investment, and that investment is real. So there is a lot of optimism about a narrow set of names. The Bank of Japan, of course, is going to look broadly at the economy and also has to be concerned with households and their well-being and how specifically they're impacted by inflation.
What's the risk from this BOJ policy meeting, especially when we have the deputy governor carrying out the press conference?
So I think that the expectations are for a hike, and if we see that delivered, it will have been very well signaled. We've also heard about the balance sheet, whether we are going to see a pause in the taper or not. Regardless of whether we do see a pause or not, the balance sheet is shrinking because they don't have to reinvest the proceeds of redeemed assets. So the BOJ is still going in the direction of tightening, as it should do, given inflation has been riding above its target for quite some time. So I would expect the BOJ to signal continued gradual normalization. As far as the deputy governor goes, we have some seasoned executives on the BOJ board. So I think it's much more important that they continue communicating with markets than who exactly delivers the address.
Will we see a sharp move in the Japanese yen depending on how markets perceive Uchida-san has done in this presser?
Well, the yen is a very interesting one, just because there are things that are slightly inconsistent going on. First, we saw a rise in the dollar across the board because of supposed demand for petrodollars, which is logical when we saw a rise in oil prices. But now it's all about the risk appetite and funding that in yen, which is still a very cheap currency. So it can't really be both. And contradictions are probably a good time if we go a little bit too far and add to that the net yen short positions. So that seems to be a good environment for the Ministry of Finance to be looking at intervention, because they might be effective when you have this type of contradictory trading.
Do you expect authorities to step in?
I think that it's an effective time, but I'm not saying that they will or they won't. If they have to, I'm sure they will.
Because even last time when they did, it was really difficult to keep strengthening the yen. It came back to the 160 levels. It was even difficult to break 155 at some point. Do you expect a little bit more strength in the yen given how far we've come?
So intervention can't really be used as a substitute for monetary policy. The Bank of Japan, by signaling continued normalization, raising rates, etc., should provide at least some guidance long term for the yen to normalize. The yen is cheap by any measure, but right now, at least short term, it's much more about the risk appetite, and it's just more about using yen to fund other assets, risk assets. So that probably won't last forever, but that is the theme right now. now. If intervention does happen, it might interrupt it, but I don't think that intervention alone is going to be the catalyst to turn it around.
I mean, we saw the huge yen carry trade unwind just a couple of years back. Is there any risk around this time, given, of course, how we are expecting more rate hikes? Also, you mentioned how the balance sheet is still shrinking, no matter what they decide to do with JGB purchases.
I would say that all carry trades, and the yen being probably one of the greatest, are at risk of unwind if we do get a shock. We haven't got a shock yet, but that doesn't mean that we never will.
It was interesting to see how the RBA really got ahead of other central banks when it comes to tightening. We're expecting another decision today. What do you take away from monetary policy moves around the world that could be reflective of the times right now in global economies that global economies are going through right now?
So in a sense, the RBA is very interesting because in a sense, it might be the canary in the coal mine. And I don't mean Australia is more vulnerable than other economies. It's relatively well insulated, but it is very sensitive to some of the leading themes right now in the market. For example, the rising inflation that came along with tariffs, as well as the Iran conflict. But then also the shifting of the Chinese economy. It went from investing in almost everything to now being much more concerned about the strategic industries and then these anti-involution campaigns that also target reducing capacity in some of the old economy sectors. So that also affects Australia. So if, Australia is in the sort of crosswinds of a lot of these trends right now. And I mean, that considered, it's doing relatively well. But I think it's also the RBA's decision is telling us, they've been on the early side of catching the inflationary impact. And so I don't think the rest of the world can think it's totally immune.
Naomi, Fink, always good to have you on BOJ. The Chief Global Strategist and Chief Economist at Amova Asset Management. Of course, we do have the RBA rate decision as well later this morning. More ahead on the Asia trade. This is Bloomberg.
The Fed decides.
America's future will truly be unlimited with Kevin at the helm.
To fulfill this mission, I will lead a reform-oriented Federal Reserve.
If the Fed chair chooses not to speak, you're basically outsourcing forward guidance to everyone else.
Trust Bloomberg to bring you the fastest coverage and exclusive analysis.
What is the worst Fed's response mechanism to inflation?
And what does it mean for the dynamics of the American fixed income market?
Tune in to Bloomberg Surveillance. The Fed decides, starting at 1:30 p.m. Eastern.
Well, European allies still have many questions about Washington's deal with Tehran and don't appear to share Trump's optimism when it comes to the reopening of the Strait of Hormuz. Let's bring in our Bloomberg editor, Michael Heath. And President Trump is still saying that it will reopen by Friday. Certainly his European allies, perhaps in private, have some doubts as to the practicality of how this works.
Yeah, does seem to be a divide, Heidi, and I guess one of the major questions is just how many mines there are in the strait, and there's been dispute over that too. That one side, some people say that that Iran has laid them since the war, and obviously this is pretty problematic, and others say, in fact, there's not that much there. The Europeans, they sort of want to go in and help here, but they do need clarity that that basically we have got a serious ceasefire here, and they're not going to be exposed to fire because these mine-sweeping operations, they obviously can't really defend themselves. So they sort of need a bit more confidence on that. And I guess there is still all these questions sort of bubbling around the memorandum of understanding, which hopefully we'll see on Friday or just after Friday. So yeah, there is a divide on there. But President Trump, as you say, seems very confident that things will start flowing. But the other thing is for the shippers, whether are they confident about, do they have the confidence to keep pushing through? I mean, everything will be okay, or do they need more reassurance? We'll just have to sort of wait and see how it plays out.
There's been a lot of defensive responses from JD Vance, for example, saying it's not true that Iran would immediately receive $24 billion of frozen assets, or that there would be a fund to rebuild the country. It's interesting, we spoke to a guest earlier in the last hour, and he was saying the Iranians will be very good at really pushing the boundaries of what they can get over the next 60 days.
Yeah, they're known as masters of negotiation, just negotiating for negotiation's sake. They're quite famous for that, just their enjoyment of it, but being very good at it as well. What's happened is that on the Iranian side, some of their state media have put out what they claim are the 14 points, and a $300 billion reconstruction fund was part of that. It looks more like an Iranian wish list than anything that the US has probably agreed to. So again, we sort of just do need to wait and see. But it does seem there'll be some release of funds there, which is obviously urgently needed by Iran, and it's going to upset Israel probably quite a bit as well, because it just replenishes their stocks to support their proxies and that sort of thing. So yeah, I mean, just the details of the actual memorandum of understanding are going to be fascinating to see.
Bloomberg editor Michael Heath, as we continue to wait for more details. Of course, 60 days is a long time. The interim peace deal between the US and Iran is also taking centre stage when it comes to the G7 summit in France. Bloomberg's Tyler Kendall reports.
The conflict in Iran is dominating the conversation at the G7 as we await further details on a potential signing ceremony as soon as this Friday here in Switzerland, and what exactly is in this memorandum of understanding. Of course, the largest component at the moment is that both sides say that we can expect a reopening of the Strait of Hormuz. But our own reporting here at Bloomberg News indicates that some G7 allies are wary about the timeline, even as President Trump doubles down that it will be fully reopened by the end of this week.
The strait is already partially opened. As you know, they're doing a little hunting for a couple of mines that they've already found. But it's essentially ships are starting to go out now. On Friday, it'll be completely opened.
There are also questions about longer-term security in the strait after Iranian state media reported earlier today that the country intends to keep its grip over the waterway after the 60-day extension of the ceasefire through charging fees related to navigation, insurance, and environmental services. A senior U.S. official who briefed us reporters ahead of this trip did acknowledge that the U.S. understands that it will take time to reopen the strait for a few different reasons, including that there are still mines that are placed in the waterway, and also that commercial shippers appear to still be wary, amid reporting from Bloomberg News that many of these shippers are seeking more tangible details on how the safety of the waterway will be secured. President Trump on Tuesday is expected to meet with some regional leaders on the sidelines of the G7, including those from Qatar and the UAE. In Geneva, Tyler Kendall, Bloomberg News.
And to Tyler's point, even if a U.S.-Iran deal is signed as scheduled this week, officials are also warning that clearing mines from the strait will not be quick or easy. Let's bring in Steven Sawczynski, who leads our Asia energy coverage, and see if we just heard about some of the hurdles that there still exist in the Strait of Hormuz, because really reopening is not necessarily the same, Steve, as trade flows normalizing, is it?
No, not at all. And, we've spoken to analysts, traders, energy producers, and everyone's sort of taking a wait-and-see approach. There are a number of hurdles in terms of just getting ships through Hormuz again. I mean, first you have to look at the ship owners themselves. Are they comfortable with sending their vessels through? We were talking to the Japanese ship owners yesterday, and they need to see the details of the agreements. They need to see that there's safety there for their crews. The captains have to be willing to go through. The insurers as well need to make sure that they're comfortable with this. And then you also have to look at potentially what the energy producers are doing as well, because the energy producers, some of their facilities were damaged. So it's not a matter of even getting the ships through. It's whether they can produce at levels that would sustain a pre-war, volumes that we saw in February 2026. Ras Laffan, the world's biggest LNG export facility in Qatar, was damaged by Iranian missiles in March. 17% of its production capacity is going to be offline for years. So getting to pre-war levels is more than just the ships and getting everyone comfortable, clearing the mines, making sure that you can get this logjam of hundreds of vessels out in an orderly fashion. It's also getting all the equipment, the production, the offshore platforms, the onshore production, as well as the refineries and LNG plants operating to the levels that they were at more than 3 months ago.
Take us a little bit through the logjam in place right now. You mentioned hundreds of vessels, of course, around the Gulf at the moment. We had talked previously about some alternative routes as well. What is being done and how can we get over this hurdle until all of these different challenges that you mentioned around the Strait of Hormuz get resolved?
Yeah, so there's going to have to be some sort of system, according to the analysts and the traders that we spoke with, to get these ships through, because they can't just all go through on day one. Which ones get priority? It is going to be a process, and that's something that we're trying to gain some clarity on. It's not 100% clear, but it does show that you have the logjam on that side, but also on the other end, there are a lot of ships that would normally be going into the Persian Gulf, ferrying out oil and gas on a regular basis. And all those ships, whether they're Qatari, Saudi Aramco, ADNOC, those ships have been subleased, they've been subchartered so that they can be used elsewhere. So all the vessels around the world that are normally used to export that oil and gas through Hormuz, they're in other places. There's this displacement, there's this mismatch of volumes of shipping capacity in different places. So getting those ships as well back will take some time. So it's not just the logjam within the Persian Gulf to get out. It's also all those ships around the world to bring them back to get them back into normal operations. And that's not a matter of fixing within days or weeks. Again, that takes months to reroute all these global vessels.
Is that the skepticism that we're seeing in oil pricing today because we're rebounding from that plunge that we saw in the previous session? What will be the next few catalysts for price?
I think there's something interesting that an analyst said in a note, and they really want to see the loading of ships, so ships coming back into the Persian Gulf, the loading of ships, and then getting out of Hormuz. Because once you see that, you'll start to calculate, okay, well, we have X amount more supply on the market. That's the one thing. The second thing is demand. Is Asian demand or going to remain at current levels? Are they going to rise? One of the big equalizers in the market has been how Chinese oil imports dropped pretty significantly over the last few months. Will Chinese demand stay low at these prices, or will they use this as an opportunity with Brent below $90 and very close to $80? Will you see the Chinese start to buy more? If that does happen, if you see a rebound in demand, things do tighten, and that becomes challenging. And lastly, storage. U.S. storage levels have fallen to the lowest level in decades. The strategic reserve has been drained. It's going to continue to be reduced as some more of that oil is flowed out of the U.S. for the domestic market and also internationally, because the U.S. exports of oil has been quite high. So if inventories start to hit critical levels where they can't continue to do that, where they can't continue to tap reserves, that does become an issue.
Steven Sarczynski, who leads our Asia energy coverage there with the latest on oil prices, of course, as we continue to watch for that implementation risk when it comes to the Iran peace deal. One stock that we're watching amidst all this, of course, is the space industry right now, because we're seeing gains of more than 25% for this stock in South Korea. We just heard that Rayburn and this South Korean company agreed to establish a strategic partnership to provide air defense systems for the European and NATO territory. Rayburn and LIG will localize, further develop, and market LIG DNA's medium and long-range air defense missile systems in Europe in close conjunction with Raybur's very short-range air defense. We have seen a lot of defense names that, of course, operate also in the space industry rally in South Korea, and you can see those gains today. More ahead. This is Bloomberg. As the regional tech rally continues ahead of the BOJ, let's bring in Bloomberg Markets reporter Anthony Stevens. Anthony, the MSCI Asia Pacific Index essentially flat at the moment, but tech, one of the big gainers today.
Yeah, it's a bit of a tentative start to Asian equities, following especially on from very strong leads overnight. And I think some of that has to be risk management ahead of these big central bank meetings coming this week. Within that move, though, tech has really outperformed. You're seeing tech materially outperform industrials in Asia today. No sign of this value rotation. And that's catching up to basically the stocks in the US. There is a bit of a catch-up that the region can do, given that the stocks is up some 20% in the last month. And you're seeing that in Asia today. You're seeing stocks like SoftBank, like Hynix, Samsung, these kind of names, very big cap names catching up on the upside. What's very interesting in Korea is the rally has started to broaden out in Korea into the defense and industrial names. The defense sector clearly becoming a partner for Europeans on the technology front and on the production capacity front. So that is something to watch going forward on the Korean rally, which is a mix of industrial and tech. Now in Japan, that rally has gotten a bit ahead of itself. You're seeing tech struggle to offset the pop in industrials, the lag in industrials and banks. So a little bit more kind of a dispersed picture in Asia today than people were probably expecting coming into today.
What's going on when it comes to Asian FX if we continue to see the downside for the US dollar?
Yeah, I think that's going to be even more risk management. And I think for EMFX, the case is, that the oil crisis needs to end conclusively. You need to see ships start to sail. You need the straits to be opened for FX in Asia to conclusively get stronger. Ahead of that, there is a lot of risk management to be done ahead of the big central bank meetings, the BOJ and the Fed. These markets cannot rally if the Fed and the BOJ is in a hawkish mode. So if you're a trader and you've gotten some of these quick gains after the peace headlines of the last couple of days, you want to take some of that money off the table and sit on the sidelines until you see what happens with the Fed and the BOJ. And we're seeing some of that tentative price action today.
Bloomberg Markets reporter Anthony Stevens there. Let's take a quick look at some of the energy-related names today as we see a little bit of to and fro when it comes to oil traders and shippers, airlines and basically anyone relying on what that clarity of picture will look like for the energy sector. Continuing to watch for more details of what the days ahead and weeks ahead look like, given that President Trump says that the Strait of Hormuz will reopen by Friday. INPEX trading lower by just over 1.1%, I should say. And here in Australia, we are seeing a bit more upside for the likes of Woodside Energy and Santos. It has been a more volatile couple of days for Woodside on some chatter about potential M&A activity. S Oil Corporation off by 0.7%. More ahead here on the Asia Trade. This is Bloomberg. Take a look at how we're trading just about 30 minutes into the start of the session. For Korean equities, we're very much leading the pack of otherwise fairly tentative trading markets around the region. The Kospi up by 1.8% there as we continue to get a bit more excitement when it comes to the tech and AI space, with SpaceX surging another 20% in the second day of trading, adding that $412 billion in value after the 19% rally in the Friday session. We also had some more fundraising news as well. NVIDIA joining that AI borrowing frenzy with its $25 billion bond sale. Seeing Nasdaq 100 futures are looking pretty muted at this point. Australia is a laggard in the region, 0.6% lower on RBA day. But interestingly, we do have the only sector trading in the green is actually energy here in Oz.
Yeah, interesting here. Energy is actually leading the declines in the Japanese session in the Nikkei. Not surprising, perhaps, given, of course, the big plunge that we saw in the previous session and, of course, the optimism around the Iran peace deal. One sector that's rallying is information technology. Of course, tech just rallied in the overnight session. We saw the Philadelphia Semiconductor Index seeing another big day of gains. And, of course, all of the optimism around the AI trade, given SpaceX jumping about 20% overnight. We're following the Japanese yen very closely, still stuck at that 160 level. Of course, we are not only digesting the Iran peace deal, but the fact that we're headed towards a Bank of Japan policy decision, expected to raise its benchmark rate to the highest level since 1995 at the first regular policy meeting ever held without the governor in attendance. Bloomberg Economics senior Japan economist Taro Kimura joins us now. I mean, it was already a very challenging meeting, given that they're going to move for the first time since the December hike, and now they don't have the governor to actually speak to markets. What will you be watching out for today?
Of course, I'm the press conference by Deputy Governor Uchida is the key focus, and we are not sure how he plays in the press conference. But at the same time, we are not like expecting a big surprise from him because his policy stance is in line with the Governor Ueda. Rather, I would say he was advising Governor Ueda in terms of policy practice or whatever. So I don't think there's going to be a big difference between his signaling and like Ueda's signaling and Uchida's signaling. And also, I read him very dovish because remember 2 years ago there was a very significant market clash, which was partly attributed to the BOJ rate hike. Uchida was the person stepping in and say, you know, we halt the rate hike and don't worry. So he's signaled very dovish message and calmed the market. So that basically he's a dovish person.
How closely are we watching how the rest of the BOJ board members vote? Because now there are just 8 who will be participating, right?
Right. BOJ board is actually tilting hawkish, and 3 members voted against rate pause in the last meeting, and 2 additional members.
So they wanted to hike rates
in the previous meeting,
right? In April.
And 2 additional members speak very hawkishly in their speeches. So therefore, I think even there's less likely about this. It's going to be a split vote, and I am expecting 7-1 split vote, one vote against from a reflationist member, which was appointed by Takaichi, but basically boards are in line towards in sync towards rate hike.
Now explain to me what's happening with JGB purchases, because we're going to get an update on whether or not they reduce the bond buying and what that would signal.
Right. So they're going to reduce the tapering, or reportedly they're going to halt the tapering. That means they're going to stop the reduction of gross JGB purchases, and it's a
which means that they could keep it at 200 billion yen per quarter.
Yeah,
which should be better for the JGB space.
Right. They're gonna purchase 2.1 trillion yen per month for until they decide that they restart reduction. So they're going to keep the same amount of JGB purchases. Okay. But at the same time, big picture for balance sheet roll-off won't change because, 10 years ago when Governor Kuroda was there, he purchased a lot of long-term JGBs, and now it's redeemed. And the redemption amount far exceeds the BOJ's new JGB purchases, even though they stop tapering. So therefore, the balance sheet shrinking will continue, and the big picture won't change.
That is the technical side of things, but what message could it send to the markets, especially about BOJ independence?
I'm not associated with it in terms of the tapering policy, because it's true that the long-term yields were the long-term JGB markets has been jittery for a while, and I think it's a technical message from the BOJ to the rates market that we are watching the market and we understand how nervous the market has been. So I think it's a sensible action, and I don't associate it to the central bank independence and government interference.
Taro Kimura, our Bloomberg Economics senior Japan economist, breaking it down for us and for myself. We'll be following this Bank of Japan decision, of course, outside of the BOJ. We'll also have more analysis from ING senior Japan economist, and joining us later is also BOJ board member Sayuri Shery.
Shery, it's a big day for central banks. We do have the RBA decision as well after a string of hiking moves. We're not expecting a move from the Reserve Bank, but of course listening very carefully to the RBA Governor Michelle Bullock when she speaks to media at 3:30 this afternoon local time. This is a picture as we see a little bit of muted downside for Australian equities. I should point out we're off those session lows. We have seen the decline in Aussie bonds before that RBA decision as we see the 3-year note rising about 4 basis points there, 10-year also advancing to a similar amount. All but one economist in our survey expecting the RBA to hold the cash rate at 4.35% at today's decision. Switching out the board to take a look at what we're looking ahead in the next hour as we get China coming online later on as well. We do have the Hang Seng futures looking pretty muted. It is a tentative kind of start to trading in Asia today. Taiwan futures, though, looking like we'll see that pick up from really the reacceleration of the tech trade, the big gains from SpaceX overnight, perhaps the news of Nvidia's bond sale as well. A50 China futures trading more or less flat at the moment. Well, China's monthly economic data is due on Tuesday. Economists are expecting consumer spending to contract for the first time since the pandemic. Let's bring our China correspondent Min Lo in Hong Kong. So it looks like the economy continues to struggle, and it looks like particularly that muted recovery in the consumer continues to play out.
Yes, Heidi, you're absolutely right. You just look at the economist's forecast so far for the month of May, and overall it doesn't look like a rosy picture. And worth noting what you said about consumer retail sales expected to turn negative for the first time since the reopening from COVID back in 2022. We're expecting a negative 2.3% print there for retail sales. Industrial production probably is the only metric you're seeing on the screen there that's seeing an acceleration from the previous month. And this is largely because of the huge demand for AI globally, right? That is boosting demand for Chinese exports when it comes to chips or computer and chip components exports from China. That is holding up the industrial production side of things. Retail sales, I mentioned a decline there. Some economists are saying that this is partly because of payback after a lot of that purchases of cars and home appliances had been pulled forward because of the consumer subsidies that were given out last year. And you look at fixed asset investment expected to decelerate as well for a second straight month. This is partly because of bad weather. You have heavy rainfall, the heat wave that put a pause on some of these fixed asset investment, but also government bond issuance had been decelerating as well. But this is one area where we could easily see a pickup in the second half of the year, because we know the government has earmarked about $1 trillion to inject into infrastructure investment, particularly into what they are calling the 6 networks, including things like water networks, power, data centers, and the like. And as well, property investment, we also saw there continue to see a decline there after a multi-year-long slump in the property sector.
What implications do you think this will have when it comes to the appetite for more stimulus then?
Yeah, I think there has already been more calls for more policy stimulus from the government, given the data that we have been seeing the last couple of months haven't been very reassuring. But at the same time, because inflation is coming through because of the Iran war, that also puts less urgency for monetary easing. Although it's worth noting, just against this backdrop where central banks around the world are hiking, the next move for the PBOC is likely still going to be a cut, although many economists think it could be closer to the later part of this year, or possibly even next year as well. We do have PBOC Governor Pang Gongsheng speaking tomorrow at the Lujiazui Forum in Shanghai. I'll be covering that event. That is where maybe we might get a little bit more of a hint as to the rate cut trajectory for China in the second half of this year.
Bloomberg's China correspondent Min Lo there. Well, coming up, we take a closer look at Australia's population growth and the challenges ahead as migration remains a political flashpoint amid a severe housing shortage, but fertility falls and continues to fall to record lows. Australia Ahead is next. This is Bloomberg. Australia's fertility rate has fallen to a record low. The Australian Bureau of Statistics reporting 1.48 births per woman in 2024. That's down 25% from the 2008 peak. That's well below the 2.1 needed for population replacement without migration. Prime Minister Anthony Albanese has dismissed the idea of reducing the migrant intake, even as the anti-immigration One Nation party gains in opinion polls. Let's get more on the outlook for Australia's shrinking and ageing population, the economic impact on the labour market. Joining us now is Roger Wilkins, who's a professorial fellow at the Melbourne Institute of Applied Economic and Social Research at the University of Melbourne. He's also the co-director for the Household Income and Labour Dynamics in Australia survey. Roger, really great to have you with us. So, you kind of need one if you don't have the other, right? We know the replacement rate has been below target for decades now. Are there options other than migration, given it continues to be a political flashpoint?
Not a lot of options. I mean, it's declining fertility is not unique to Australia, but it does pose a very difficult policy problem. I think it's going to be something that's very hard to turn around. I mean, policy can have some impact in reversing it, but I think Australia's longer-term economic interests are in maintaining a healthy immigration program.
You're completely correct, of course, to point out this is not a problem that's unique to Australia. You only have to look to the likes of Japan to see what that ageing population future might look like. But I do wonder, have there been any successful policies when it comes to encouraging and getting the birth rate back up? Because we know that things like, baby bonus haven't exactly been effective in the longer term.
No, although of course that was a short-lived policy, particularly when, so in the early 2000s when Australia had quite large cash payments made to new parents. It reached a peak of around $7,000 Australian per child, but that only lasted for a very short period. And we did see a bump up in fertility rates at the time. So I think there is some merit in programs like that, where large cash payments at around the time of birth, they have a salience that perhaps works better than things like childcare subsidies, which can be somewhat difficult for people to understand and really fully appreciate in terms of factoring in whether to have a child or not.
The trifecta of a falling birth rate, of potential limitations on migration, of an ageing population, what's the overall impact on the labour market?
Well, I mean, it's certainly, in the broader context, Australia is an ageing population, not ageing as fast as many other OECD countries, but nonetheless ageing. And so you have a smaller proportion of your population of prime working age, and so that certainly raises challenges for longer-term living standards. And it also, that changing structure of the population also has implications for the structure of the labour market. You'll see increased demand for things like healthcare and aged care and the like, and so employment will very much follow that as well. So it will certainly have profound implications for the broader economy.
In Japan, there's been some success in utilising, harnessing technology and robotics in terms of how that serves the older and ageing population. There's been much talk about the impact of technology and AI on productivity in Australia. Do you see strategies there that could be meaningful?
Well, that's certainly something that's possible, but well out of my domain of expertise, being an economist rather than someone who is intimately connected to AI and technological change, and so it's not something that I would want to speculate too much on, other than, as you say, the promising developments in Japan. I would certainly see in the context of labour scarcity that those sorts of technological solutions would become more attractive, and so we are probably going to see more developments in that space, but I wouldn't want to speculate on how successful they would be.
The shape of the broader economic demand picture changes, though, with an ageing demographic, right? Does that then, of course, change what employment demand and labour market demand also looks like?
Well, yes, absolutely. The structure of consumer demand, is very much shaped by the demographic structure of the population. So, as I was mentioning, with an aging population, we would see demand shifting towards those items that are more heavily consumed by older people, as I mentioned, healthcare, aged care, but potentially other areas as well.
How does this impact living standards?
Well, yeah, certainly, if we are to have an ageing population, which immigration can certainly moderate that trend, but absent a significant immigration program, what we'll see is a decline in the share of the population that is in those prime working ages, and ultimately that's where economic output and economic growth comes from, is from the working age population. So as that declines as a share of the population, the outlook for living standards and economic growth more generally is poorer.
Roger, really great to have you with us. Roger Wilkins, who's a professorial fellow at the Melbourne Institute of Applied Economic and Social Research at the University of Melbourne. We have more on Australia ahead every Tuesday at 10:40 a.m. if you're watching in Sydney, 8:40 a.m. in Hong Kong. Plus, you can tune into the Bloomberg Australia podcast, delving into the biggest stories shaping the country's role in global business. You can find that on Apple, Spotify or Bloomberg.com. More ahead here on the Asia Trade. This is Bloomberg.
Shares of taxi-hailing app provider Go have now started trading in today's session. It opened at $29.10 with an upside of more than 20% from its IPO price. And this was Japan's largest IPO so far this year, with the company raising $553 million in the offering for market value of 186 billion yen just last week. Now, with this strong debut, it could offer a much-needed tailwind for Japan's IPO market. There have been only about 17 IPOs priced so far this year, which is really the fewest since 2011. Now take a look at some of the top corporate stories that we're tracking as well. The creator of Chinese social media platform RedNote is set to be preparing for an IPO as well in Hong Kong by the end of June. Sources telling us that Xiaohongshu is working with advisors on a potential listing that could rank among Hong Kong's largest in recent years. The app, described as China's Instagram, has grown into a lifestyle and social commerce powerhouse. Shanghai and Flame Technology has received approval for an IPO to raise $888 million on the Shanghai Stock Exchange Star Board. The Tencent-backed company plans to use the proceeds to develop AI cloud chips and related software. And Flame is the last to go to market of China's so-called Four Little Dragons, a group of leading AI chip makers.
The founder of Indian pharmaceutical giant Biocon says the country needs to maintain biotech sovereignty as AI advances. Kiran, Mazumdar-Shaw told us exclusively that India needs to attract further investment into the industry to capitalise on its advantage in talent.
India can, because I think we have, we don't lack the talent, we don't lack the science, we don't lack the capability. But like I said, we do fall short when it comes to the investments that are needed to get us to a global scale. And I think that's where we need to focus. And I think India is beginning to recognize that. I think opening it up to the private sector is extremely important. And hopefully VCs will see the merit of investing in these very exciting opportunities, because these opportunities will not scale without having the right talent. And I think that's where India has an advantage.
Talk to us about why it is important for India to have biotech sovereignty embedded in AI. Is it about not allowing India's biological data to sit in the US, sit in China, where, they possibly can create therapies for Indians themselves and then sell it back to India at a high cost?
My view is that when I talk about biotech sovereignty, this is going to be about trading data, trading knowledge. And every country will have its own sovereignty embedded in many of these areas. And I think biotech is a very exciting area because of the fact that biology has never been so computational in the past. And India has that capability, and several countries have that capability. So I think allowing our data to be leveraged by other countries and not doing something with it ourselves is going to be a lost opportunity.
Kiran, we're talking about biotech sovereignty against a backdrop of India's reliance still on China when it comes to supply chains. Where are we with that? I mean, how successful has India, Biocon, been in trying to cut its reliance, cut the cord?
You know, it's very interesting for you to note that China's generic and API business was built by Indian talent, by the way. Indian talent went to China and helped them to develop API know-how and finally generics know-how. So it's very important to point that out. Of course, China then learnt very fast and then built...
ran with it.
And ran with it. But having said that, in biologics and biosimilars, there is zero reliance on China. In fermentation science and fermentation APIs, which is what Biocon has really focused on, zero reliance on China. So from that point of view, I don't think Biocon has had a problem of China reliance in terms of supply chains.
That was a Biocon founder and chairperson speaking to Bloomberg. And we're watching some defense stocks as we're trading in the Asia session. We're seeing broad upside with names like TerraDrone expanding its investment in Ukrainian interceptor drones. We also had LIG, for example, rallying as they have now announced a strategic partnership with Rheinmetall. That's it from the Asia trade. Our markets coverage continues. The China show is next. This is Bloomberg.